Alright, there we go. Alright, so I'm here. I'm live on YouTube. Let me go ahead and get this started up over here, so I can get the link out for the recording, and then we should be good to go. Okay, bet I'm live right here. There we go. Alright, there you go. Alright, so what's up, guys? What's going on? What's going on, everyone? So today, I'm sure most, if not all of you guys, pretty much saw here. Hold on, let me see. Hey, what's up? What's up, Thiago? What's going on, my man? Let me get the Discord opened. Let me get the chat open. Let me see. Bet. Hey, what's up, guys? What's going on? What's up? What's up? What's up? Okay, so today, right? I ended up catching two amazing trades actually. So here, I'm gonna go ahead and screenshot my entire screen, and put it over here on my thing. Let me see. So here it is. What's up, guys on YouTube? What's going on, everyone? What's up? What's up? Okay. So here, let me share my entire screen here, right? And now you guys can see everything, right? So let me show you guys exactly what I saw today that ended up. Oh, it's me, Rickster. I'm on my son's YouTube. Okay, sounds good. Sounds good. What's up, Rickster? What's going on, right? So guys, what I ended up catching today was, let me tell you guys. So here's the trade, right? So if you guys look at my screenshot right here, you guys can see that I ended up catching two trades today. So it was NQ shorts and I ended up taking NQ ES longs, right? Two very big trades and two amazing trades, right? So I pretty much just want to break down exactly what I saw behind these trades, exactly what I saw, why I liked it, and why I gave it to you guys, so you guys can of course catch it and trade it with me, right? So of course the first trade that I'm gonna be teaching you guys today is gonna be this NQ short, which was beautiful. We ended up catching this trade like we read it perfectly, right? So what we're gonna do here is I'm gonna go ahead and open up my NQ chart. So it's gonna be just like this. Hold up. Let me go ahead and put this here. Alright. So wait, let me see. There you go. Right. So what we're gonna do. Hey, what's up? What's up, Tony? What's going on, guys? What's up? What's up? So here's a trade that I pretty much caught today. Exactly what I saw and how you guys can catch it too. And I'm telling you guys, it is so simple, right? So the first thing we want to go ahead and do is, you guys know, the first thing we always do is find drawn liquidity. So when I ended up catching this trade at, I believe, 10. Let me see. Yeah, I caught this trade at 10:01. Right. So I'm gonna go ahead and replay this back to 10, so you guys see exactly what I saw real time. Right. So right here, pretty much what I ended up catching or seeing is, we know that the market trend is currently bullish. We need to know what the market trend is and exactly where the drawn liquidity is lying, right? So of course the first one is going to be where the market bounced from. So where is that level going to be at? Hey, what's up, Clockwise? What's going on? What's up, everyone on my YouTube? What's going on, guys? You only live on YouTube, not Discord? Yeah. With YouTube, it allows me to record everything and for you guys to watch it live, so it's a lot better, right? I'm able to do so much more stuff. But okay. So in this case, the first thing we're going to do right here is we want to go ahead and find the current trend and the drawn liquidity. We know that on the higher time frame, the current trend is going to be bullish. It's a really nice bullish trend, right? So how do we find drawn liquidity when we have the trend? Well, if we're in an uptrend, you guys are going to be marking every single bottom that the market creates. When we're in a downtrend, you guys are going to be marking every single top that the market makes, right? So in this case, since the market trend is currently bullish, we're going to be marking out every single low that the market creates, right? So how is that going to look like? Well, the first thing you guys want to do is mark out every single low where the market bounced from. So it's going to be these levels right here, right? Just like that. We're going to have some more down here, but these levels aren't too important right now. It's just so you guys get the pretty much the grasp of it, right? It's really easy to find these levels, but the main level that we're going to be focusing on is the most recent low that the market created. Where's that going to be at? Well, it's going to be this low that the market created right here, right? So we know that this is one of the most important levels of liquidity in the market, as first of all, it's the most recent one, and second of all, it's very strong. How do we know it's strong? Because when the market opened up on the 5-minute time frame, you guys know the market opens up at 9:30. The first thing that happened is the market went ahead and dumped about 60 points, right? 76 points, my bad. Yeah, so the market dumped 76 points, found this bottom at 19,882, and continued to break these highs and see higher, right? So it pumped up right after that dump about 144 points, right? So we know that this low right here is extremely strong and it holds a lot of liquidity. How do we know it holds a lot of liquidity? Well, main reason being is actually because, of course, when we know that the current market trend is bullish, right? Ideally, we will want to be looking for longs. How do we look for longs? Well, we're not going to be buying as the market is going up. We're going to be using the pullbacks to pretty much buy, the pullbacks, and then it goes back up since the market trend is currently bullish, right? So in this case, when people see this dump and they found out that the market is finding a low right here, what's going to end up happening is a lot of people are going to start looking for longs and placing their stop loss at 19,882, right? So once we have this, once we know that a bunch of stop losses are placed at this level, we'll know exactly what to look for liquidity, right? So ideally, what people are going to start doing is using this 882 level as their stop loss, placing their orders there, and of course, a lot of orders creates a lot of liquidity, right? So now that we know where the DOL is to the downside, we want to start looking for DOL to the upside to look for possible rejections, right? We don't know if the market is going to continue going higher since the trend is bullish, and we also don't know if the market is going to go back down with a market structure shift, right? So how do we know this, right? And this step right here is the one that helped me find this amazing trade that ended up, resulting in like 70 points. Let me see. Hey Blasphemous, can you help me understand why I tend to lose my first trades of the day? I guess I get FOMO. Okay, so let me ask you this, right? And I want to see your honest answer. What time do you open? Like, what time do you actually start trading? Do you start trading the second the market opens, or do you give the market some time to pretty much like to do its thing and then you play after, right? Let me know. So it's either right off open, or you give the market some time and then you trade after the market gives you the trend and gives you other setups. Let me see, because I used to have the same exact issue, and for those in my premium, you guys know that we went from trading right off open to trading about 30 minutes after market opens, right? It just allows us to give the market some time to tell us what it wants to do, and then we go from there, right? And that's exactly what ended up happening today. So let me know in the chat. But anyways, now that we know exactly where the drawn liquidity is lying to the downside, we want to start looking for drawn liquidity to the upside, just in case we have some room to go higher, right? So how do we find drawn liquidity to the upside if we haven't seen any upside in a while, right? Well, what you guys do is simply go on the higher time frame, such as the 30-minute time frame, and you guys will see that we actually no, 15-minute time frame. I think is where it's at. Yeah, you guys will see that we actually have a very strong level of liquidity right here at 20,022, right? And I'm gonna explain to you guys exactly why this level is so strong and exactly how you guys can play off of this, right? So you guys know, right off open, the market pumped up, found these highs, and of course it took out the highs, right? So these highs right here aren't too important, right? Any of these highs right here that I just marked out, they're not important anymore because the market, of course, went above this level, right? So what you could do in this case is, if you look at the 5-minute time frame and you expand your time frame a little bit more back, you guys will see that we have one more level of liquidity before we just don't have any more to the upside, right? Until, like, it's pretty far away, right? And you guys will see that we have this 20,022 level, which is extremely strong. Why do we know it's strong? Because at the time that we created this level, the market trend was extremely bearish, right? So you guys know that sellers were looking for pullbacks to find entry points to the downside, right? So in this case, you guys know market sold off, found this high, right, which is going to be drawn liquidity, right here. Market sold off again, pumped up, found this high, and dumped right back down again, right? So these two levels at 20,022 and 20,107, right? These are very strong levels of liquidity. And of course, you guys can always mark out the top right here, which is also another level of liquidity. But we're just going to be focusing on this one right here, right? Now, what is one thing that we have that's extremely important in this case? Well, we know that we have drawn liquidity at 20,022, but one more thing that we actually have in this level is a very nice bearish fair value gap, which we actually ended up rejecting from as we created that level. Right, so it's going to be marked out just like this. So in this case, we have a bearish fair value gap on the 5-minute time frame, and we also have a very strong level of drawn liquidity. I kind of lost my thought there, right? So we have a very strong level of drawn liquidity, and we have this huge fair value gap that the market is currently rejecting from. Right now, how do we know that this fair value gap is still a valid fair value gap? Well, we actually know this because the market, ever since we dumped from this level, the market has never really retraced back into this level until today, right? So here, let me catch up with the chat. Bullish finding low. Let me see. Bullish finding you find the drawn liquidity to the downside. Bearish you find the drawn liquidity to the outside. Actually, I was wondering things. I got you, bro. I got you, Jose. I got you. Let me see. I opened my laptop from 8 a.m. to 11 a.m. latest. Right? Okay. So Glory. In this case, you're not giving the market enough time. Right? You're not giving the market enough time during New York session. Because you're just not giving it time to make the trend. You're opening the charts way too early. For me, yeah, my bad. For me, I tend to open the charts at 9:30 to see what the market is doing, but I do not take any trades till after the 9:30 candle, right? So usually I like to take trades minimum 10 a.m. You guys know what's it called? For my premium chat, you guys know that I start giving you guys setups and alerts right after 10 a.m. Why? Because I believe that if you give the market some time as it opens, it'll give you like more of an understanding of what it's trying to do right off open, right? Because of course, if you're trying to trade the second the market opens, there's going to be orders left and right, and you don't know what the current trend is, right? But if you give the market about 30 minutes after it opens, you'll know exactly what it's trying to do, at least for the entire morning, right? And then once you know what it's doing, you just go from there, right? And that's exactly what I'm trying to do in this case, right? So in this case, right, remember, we have the 20,022 level. And we're also rejecting off this fair value gap. The reason this fair value gap is still valid is mainly because the market has not yet filled this fair value gap. And even as we speak right now, this fair value gap has not been filled, right? And yeah, exactly. So I'm not giving the market enough time. Exactly. So Glory, in my case, I would tell you give the market a few, maybe like 30 minutes to an hour before you take any sort of trade. And then you start going from there, right? And once again, for those of my premium, you guys know that I do this, right? I used to take, I used to struggle a lot trading right off open because you will see one setup, and then since the market volume is all over the place, you end up going red. You know what I mean? Because the volume is bullish and bearish and bullish. No, let all the chaos happen in the first minute of the market, and then 30 minutes after, you just let the waves cool down. You know what I mean? Like, you'll have the trend, you know exactly what it's doing. If the market continues to chop at 10 a.m., that's your cue to not trade the morning, right? So trading at 10 a.m. EST, yeah, and clockwise, I'm sure you know that too. You're in the premium, so I do know. But still keep an eye on it because, yeah, exactly. So exactly how Jose said, definitely keep an eye on the market. I'm not saying not to open the charts at 9:30, but just don't try taking any trades at that time, right? It's really not worth it because I'm not gonna say most times, but there's gonna be a few times where you actually end up getting chopped out or you get faked out because you're not giving the market enough time to tell you what it's trying to do, right? So yeah, I would say give the market about 30 minutes to an hour after market open, right? Hello from Africa, bro. What's up? What's up? Let me see. Why is it I've heard that people say market opens at 8 a.m., people say it's 9 a.m., and people say it's 9:30? Okay, well, keep in mind, it also, what's it called? It really depends on your time zone. I'm talking Eastern time, right? So New York session opens up at 9 a.m., 9:30 a.m. Eastern time, right? I don't know if you're 1 hour behind, maybe 6 hours if you're in Europe. I don't know, right? So make sure you guys figure that out. But the reason people say that there's multiple times throughout each session is because there's 3 sessions in the futures market. There's Asia, there's London, and there's New York. Okay, so if you're EST, New York session opens up at 9:30 EST, right? But yeah, there's 3 sessions: Asia, London, and New York, right? So maybe you're getting confused with that. But okay. So let's continue here, right? So now we know that this fair value gap is a valid fair value gap because we have not filled it. You guys know if we ever fill a fair value gap, it has to fill the entire gap, right? Keep in mind, we have this gap that we have not filled, which is pretty small, but it's still a valid fair value gap. So what are we trying to do in this case? Well, let me show you guys the commentary channel, right? So in this case, I went ahead and told everyone. Let me show you guys right here. Pretty much what I told everyone is coming into market open, it seems like the short-term bias is bullish. Why do I say it's bullish? Well, because right off open, you guys see that the market is actually pumping up like crazy, right? You guys see it right here. So what I told everyone is it does look bullish short-term, but I am bearish long-term. Here's exactly why and how we're going to trade it, right? So looking at the 5-minute time frame, NQ is currently pushing into this 5-minute bearish value gap where it previously rejected and created the drawn liquidity, which is the level that I just showed you guys, right? So what level is that? Well, it's going to be this level right here. We have the fair value gap and we have the drawn liquidity, right? So in this case, we're going to be keeping an eye on this 20,022 level to see if price could possibly sweep above this level and reject off the fair value gap and go into the drawn liquidity below, which would be this level right here, right? You guys remember the levels that we marked out to the downside? It'll be right here, right at 19,882. Let me see. David saved so many lives, I could tell you, bro. I'm trying to change lives out here, But in this case, right, we know that 19,882 is the level of liquidity if we end up going to the downside, right? So that's why I said here, I'm keeping an eye on this 20,022 level to see if we can possibly get a rejection. If we do, we're going to end up looking for an inverse fair value gap. Now, you guys might be asking, where's the inverse fair value gap here? Because I might not see it, right? Well, let's kind of catch up with the trade so far, right? So in this case, the trade, currently what we know is we have the trend. We know the trend. We know the drawn liquidity, which is going to be down here. We know that we're getting an MSS model. Main reason being is because the market went ahead and broke above this level, right? Above the level of liquidity. We swept all the orders. Now we swept all the orders, the market is not really interested in going any higher. Why? Because we took out all the orders to the downside, to the upside, and now we want to go ahead and take out orders to the downside, which is going to be at 19,882. You guys get what I'm saying? So now that we know that we have the trend, drawn liquidity, and MSS as sellers are stepping in, we want to start looking for an inverse fair value gap. How do we find the inverse fair value gap? Well, if you guys zoom in right here, you guys will see that currently we have a fair value gap. right? So if I extend this bar before we ended up sweeping, you guys will see that we have this level down here, right? So this fair value gap right here, even though it looks pretty small compared to the other one, it is still a valid one. How do we know it's valid? Because this candle is 68 points. You guys remember how I always tell you, right? Anytime a candle is about 40 points or more, it'll be a valid fair value gap. In this case, it's 68 points, making it more than valid, right? So what are we going to do in this case? Well, we're going to go ahead and mark out this fair value gap right here, right? And keep in mind, notice how we have not retraced into it, right? So we're just looking for some fresh price action to go ahead and break below this, and then that'll be our cue to go ahead and enter and target this low down here, right? So let's catch up again, right? Let me see. So I entered so late when we let me see. I entered so late when we traded this live. Shit moves so fast. Yeah, I'm not gonna lie. Today's price action, I wasn't even able to stream on my YouTube. You know, because you guys know I usually live trade on my YouTube. I only did it with the premium because it was way too fast. Everything was happening super fast. Yeah, so definitely one of those days. But most of us ended up catching it, so we can't really complain, right? But in this case, right? So we have the fair value gap. We have the fair value gap right here, and we have not yet retraced into it. But we are rejecting off this bearish fair value gap on the 5-minute time frame, which is going to be this one, and we're also sweeping liquidity. So what are we expecting in this case? Well, what we can do in this case is simply just wait for a simple selling candle. We break below the inverse fair value gap, and then we just simply target this down here. So how is that going to look like? Well, you guys see right here, the next candle went ahead and, you know, of course, sold off, giving us the confirmations that, of course, sellers are stepping in. Right? Is US 30 faster? I don't think so. I think NQ is one of the fastest ones out there in the market. I saw a fair value gap on the US 30. I never really chart US 30, so I don't really know too much about it. But yeah, if it worked out, I mean, it worked out, you know what I mean? But yeah, in this case, right, what you guys can see right here is eventually we ended up breaking below the market, or not the market, the inverse fair value gap, right? So what is this cue? Well, I told everyone the second we break below this low down here, it'll be our cue to go ahead and enter shorts, right? Why are we entering shorts? Well, simply because we know that the market trend is currently bearish, and we have a lot more room to go lower into this level of liquidity, right? So we went ahead and entered shorts right here at 961. We set our stop loss. Ideally, I wanted to place it right here, but I placed it up here just to be a little bit more cautious, right? Since price, you know, was all over the place, and we went ahead and set our price target down here, resulting in a 1 to 3 trade. Let me see. Can you find these fair value gaps on gold? 100%. Yeah, 100%. You can find them on gold, stocks, futures like NQ and ES. You could do them on Forex. Yeah, you could do them on anything. That trade was so nice. I think that's a weekly best. Honestly, we'll see. The week just started. Hopefully, we can get a better trade tomorrow, but we'll see. Today's trades were amazing, right? But yeah, long story short, what ended up happening is here. Let me tap into Discord. You guys can see that we ended up catching this trade right here, which was here. Let me catch up right here. It was right here, right? So we ended up finding an entry right here on NQ shorts at 19,961.25, and here's exactly how the chart looks like real time, right? So we got the sweep, we got the fair value gap projection, we got the inverse fair value gap, and of course we knew that we had room to go lower, which made it was pretty much a cherry on top to know that the market was going to go down. So we went ahead and entered shorts, and long story short, we ended up catching that entire move, right? We caught about a 70-point move on this trade, right? And yeah, eventually you guys might be asking, well, we never hit price target. Well, of course, we're up 70 points still. We're up a ton of profit. So I'm going to be taking profits on the way down. Keep that in mind. And the market didn't really end up taking out drawn liquidity yet until later throughout the day, which of course I was out of the trade by then, right? But that shows that, of course, we had a lot more room to go lower, right? So that's exactly how I ended up catching this one trade on NQ, which was amazing. And once again, if you guys do want to check it out, here it is. We ended up catching, let me see, NQ shorts right here at 19,961. Here's how the chart looked. And here's exactly, of course, how the trade resulted, right? In an amazing dump. Now, I do want to break one more trade. Let me see. David is a walking money printer. Bro. Bro. But okay. So here, let me catch up with the Discord chat right here. Let me see what you guys are asking. Let me see. David, have you ever heard of the chair pattern? I don't think so. Okay, so what time frame are you on when you enter your trades? I'm always on the 5-minute time frame. That is my go-to time frame always. I love trading off the 5-minute time frame. Is not too long, but not too little. How do I join the Blaster Straight server? It's if here I can link you my YouTube. I'm not gonna link my thing, but you can find all my information here. Here it is. Yeah, so it'll be in the link in the description. But yeah, let me see. David, do you know do you place your orders on TradingView or on TradeAvate? I always place them on TradeAvate. So I have TradeAvate on my second monitor, which you guys can see right here, and I have my TradingView, which you guys see right here, right? Bro, why do I not see the stream on Discord? Because I'm streaming on two Discords. I'm streaming on my YouTube and I'm streaming on another Discord to help a friend out, right? So everyone is getting the best of both worlds. But I do believe my YouTube is a lot cleaner, as you guys can see, you know, my face cam and all that stuff. So it just adds more stuff. Let me see. I always have a 5-minute SPY chart up with my custom indicators. I would say try having ES up. It's just a lot better. Bro, Brizzy. When does market close? When does market close again? At 4 p.m. EST. Let me see. We'll have that too. I'm just saying for Confluence. Okay, got it. Yeah. Honestly, SPY and ES, they move the same exact way. Just ES has more of, you know, ES is open 23 hours a day. SPY is only opened throughout the New York session, right? But guys, let me show you guys one last trade that I ended up catching that was amazing, right? And for those in my premium, you guys remember that I told you, I pretty much broke down this trade before it happened. I told you guys exactly what to expect, what to look for, and exactly how to play it. And it did just that a few minutes after, right? So the trade that I'm talking about here is going to be this, let me see. It's going to be this ES trade right here. So you guys can see, I ended up saying that we caught a 9-point trade. It was pretty much an idea since I didn't really alert it. But a lot of people ended up trading this, right? So it was on ES, right? And here's exactly how it ended up playing out. And I'm pretty sure you guys know exactly what's going on. Let me see. David, can you show the trade I took? Amali? Yeah, go ahead and just send it to me and I'll open up in the chat. That ES trade was crazy. Yeah, a lot of people actually ended up taking it. Let me see. You made $100. That's what's up, bro. That's what's up. But okay, so in this case, right, here's a trade that we're looking at, and here's a trade that I'm going to go ahead and break down exactly how you guys can go ahead and catch this type of trade, right? So we're going to be using the same model that I always teach in my previous classes. If you guys want to go ahead and check that out, it'll be in my YouTube, right? I do these classes almost every single day where I explain all of these setups and exactly how you guys can find them and exactly how you guys can trade them. And of course, today is nothing new, right? It's pretty much just a review. So what we're going to do in this case is I'm going to go ahead and open up ES right here. We don't really need NQ anymore. Okay, so we're here on ES, and I ended up catching the trade around this range right here. So let me go ahead and do this. Right? So okay, let's kind of catch up here. Right? So what's the first thing we want to always do? Of course, you guys already know. What, $100? My monthly salary is $50, bro. With trading, I promise you, it can open a new world of literally everything. I can guarantee you that. Right? But anyways, in this case on ES, what we're going to be doing is we first need to identify what the current market trend is. We need to identify where the drawn liquidity lies, right? So you guys remember on NQ, you guys know ES and NQ pretty much move alongside with each other. In this case, what we're going to be doing is we're just going to, if you guys remember on NQ, we ended up targeting what was it? It was 882. You guys remember how the market created this low at market open at 930, right? And we ended up taking out eventually. On ES had a bearish SMT, meaning that ES was a lot weaker than NQ was this morning. Pretty much meaning that right here, you guys can see, pretty much what it means is that at 9:30, you guys see that we have the same exact low, the same exact candle, but ES just didn't see as much upside as NQ did, meaning that we're a lot closer to the level of liquidity, right? So what's going to happen in this case is currently we know that the market trend or the market drawn liquidity is at 5,586, right? What ended up happening is compared to NQ, ES actually ended up taking out this level eventually, which you guys can see right here. So what ends up happening in this case? Well, if the market went ahead and took out the main drawn liquidity, right, and we start seeing some upside, it's signaling that the market structure is shifting from bearish to bullish, right? Okay, now we know that the market is trying to shift to the upside. You guys can see right here, we start seeing some really nice green candles, right? We know that sellers are getting weaker and buyers are getting stronger. Now, what's the one thing that's really holding us down from seeing this drawn liquidity to the upside, which is where the market rejected from, right, at 5,607.75? Well, the one thing that's really holding us down is going to be this bearish fair value gap. Right, so if we put 2 and 2 together, or 3 and 3 in this case, right, we know that the market went ahead and swept liquidity. How do we know this? Well, we had drawn liquidity at 586, the market went below it, and now buyers are stepping up, signaling a market structure shift. Right, now that we know that the market is trying to go to the upside, I'm not saying that it's going to go to the upside, I'm saying that, you know, it's trying to, as buyers are stepping in. The one thing that's really holding us down is going to be this bearish fair value gap, right? So of course, you guys can always expect a rejection off of it, but that's not what our model is telling us, right? So it could look like this, but this is not what we're trying to trade, right? What we're trying to trade is going to be a simple inverse off this fair value gap. So how's that going to look like? Well, simply we just want to see buyers step in, and ideally where sellers would step in, buyers are stepping in even stronger, showing you that buyers have the control. If buyers have control, where do they want to go to? They actually want to end up going to the drawn liquidity to the upside, right? Which is where orders are waiting to get filled, which is going to be actually at 5,607, right? So what we're looking for in this case is going to be a simple inverse fair value gap, right? So how is that going to look like? Well, we simply wait for a break above, which will be right here, right? So pretty much what I told everyone in the live trading call is I told everyone, guys, we're going to be simply looking for a break above this inverse fair value gap. Once we get it, we're going to go ahead and enter. We're going to set our stop loss ideally at the most recent low, which would be like right here, right? But you can ideally in this case, since the stop loss was way too tight, it was like I think in this case it was like a point, right? We ended up entering at like 5,600, right, guys? I think it was around there. So in this case, what we're gonna do is we're gonna go ahead and place our stop loss to the middle of the fair value gap, just a little, random level, just so we can have a good stop loss, and we're gonna go ahead and set our price target above up here, resulting in a 1 to 2 risk reward trade. Meaning, if you're risking to lose 200, you're risking to make about $400, right? Which is an amazing risk reward, right? And what ended up happening right after is we hit the drawn liquidity very quick, right? We ended up taking profit just like that. You guys see it just like that, right? So this it's literally a quick recap, right? It's really that simple, guys. It's really that simple. So let me know in the chat, guys. If you guys have any questions, let me know. I have some time to review some trades with you guys. I know Ali, you were asking me about the chart, so I'm gonna break it down to you. How do you know if it's gonna be an inverse or a normal fair value gap? Really good question. So let me show you guys. Right, I'm gonna create my entire model, and I'm gonna show you guys from complete scratch on what to look for to trade a regular fair value gap and what to look for when trading an inverse fair value gap. Right. So here, let me go ahead and open up my Discord chat right here. Give me 1 second. Let me see. I saw something that futures were open 24 hours. No, it's open 23 hours for 6 days a week. So it's open from 6 p.m. Today till 5 p.m. tomorrow. Then it's closed from 5 to 6. Then it resets, right? And then it's completely closed on Saturday. The setup was so good. I'm kind of sad I didn't take that, but it's all good, bro. It's all good. There's always gonna be a tomorrow. Just because you miss one setup does not mean anything. I heard often about SMT. You know anything about that? Yeah. So pretty much what SMT is pretty much an SMT divergence, right? Pretty much showing you that sometimes, okay, you know how ES and NQ, they pretty much follow alongside with each other, right? So if ES is going up, NQ is going up alongside with it, right? So pretty much what ends up happening in this case is sometimes NQ will be going up and ES will be going down, right? So that's what you call an SMT. Opinion on turtle soup, I do not know what. First of all, I don't know who came up with the name turtle soup. Like I hear about it and it's like, I know it's ICT. Yeah, I know it's ICT. But bro, like the name is just like, bro. But no, real stuff. I do not know anything about turtle soup. I do not trade it. I've never really looked into it. So I don't know anything about it. But yeah, okay. So in this case, right, Tans, how do you know when to trade a fair value gap and when to know when to look for an inverse fair value gap? Let me show you this right now. This is super simple to understand, right? So of course, before I go ahead and trade this here, let me see, because I got a message on my phone. Let me see. Okay, so what we're gonna do in this case is here. Let me go ahead and make a chart real quick, right? So it's gonna look just like this, right? So we're gonna have the border green, background green, eccentric. Okay, so let's say in this case we're gonna have a, hold on, because I keep getting DMs on Instagram. Okay, so we're gonna have some sort of a bullish trend in this case, right? How do we know it's a bullish trend? Because of course the market is creating new highs and constantly going higher, right? So let me keep doing this, and let's say that we created a fair value gap to the upside. Now, let's go ahead and say that the market went ahead and created this drawn liquidity up here, right? So it's gonna be a red candle just like this, right? And this is gonna be known as drawn liquidity. So this high up here, which is where the market most recently rejected from, that's gonna be where liquidity is lying, as of course that's where the market rejected from before it went down, right? So let me make like a little explanation, just like this. Market dumps, boom, just like that, right? So in this case, we have drawn liquidity just like this, right? Let me see, hold up. So it's gonna be DOL, drawn liquidity, right? So what we're trying to look for in this case, right, Tans, is you want to look for the market to go ahead and sweep the level. So yeah, sure. In this case, it does seem like buyers are stepping in very strong, right? and you might consider that the trend is extremely bullish, right? Okay, we got that. But the trend is not always going to be bullish. Ideally, the market pushes into drawn liquidity, sweeps it, goes back down into drawn liquidity, sweeps that, and then it keeps going up and down, right? So in this case, you can see that the market trend is bullish. We have a lot of buying coming in, and we created this fair value gap right here, right? Eventually, we end up sweeping liquidity just like that. So it means that price went above this level of liquidity, right? And now what we're looking for here is going to be a possible rejection, right? So what we're going to do here is we're going to go ahead and mark out this fair value gap, right? Because we do know that this is going to be a fair value gap. So the way we're going to do this is going to be just like this. Boom. So we have a fair value gap right here. The market went ahead and swept drawn liquidity, right? So what we're looking for in this case will be an MSS model, just like that. Meaning that a lot of selling is starting to come in since the market already filled the orders on this level of liquidity, right? So in this case, what we're going to be looking for, you know what, matter of fact, let me ask you, right? So keep in mind, the market went ahead and rejected off, the market trend is bullish, but we rejected off liquidity, but we have a bullish fair value gap. What do you think? What do you think is going to happen here? Are we going to bounce off this fair value gap, or do you think we're going to inverse this fair value gap? And guys, let me know in the chat. So okay, so Zero saying go lower. I'm not going to say it's right, but let me see what you guys think. Let me see. What do you guys think is going to happen? Okay, so Clockrise said inverse fair value gap. Okay. G Body said bounce. Okay. I want to see what you guys are saying. Okay, so Dice saying inverse, someone is saying lower. Okay, so I think we have enough, we have enough answers here, right? So what we're gonna do in this case is the correct answer. Let me see. So Tans probably gonna go lower because liquidity swept. Exactly, right? So for those that said, and guys, don't feel, just because you said hi does not mean anything, right? It doesn't mean anything, right? Yeah, we can always expect a bounce since we are in a bullish fair value gap, but in this case, what our strategy is telling us is to go lower. Why? And I'm seeing everyone in here is getting it right. I love it, right? So you guys are actually, you guys are really understanding this. So in this case, we have drawn liquidity right here. We have a bullish fair value gap, and we know that the current market trend is bullish. But we're not always going to be bullish, right? We're going to get an MSS model since we ended up sweeping liquidity, and we're getting the sell-off right here. What this means is it's going to be an MSS model, right? So I'm going to go ahead and say it just like this. MSS model, right? So let's see, market shifting, right? Let me go ahead and make this like this. And I'm going to go ahead and make this bullish fair value gap, right? So here's the model right now, right? So we have drawn liquidity, the market trend is bullish, we created this fair value gap, and we went ahead and swept liquidity. So we're not expecting the market to go higher. Main reason being is because the market already swept this high. We have no more room to go higher, right? So if we have no more orders to the upside, the market is not interested in going any higher. Why? Because we have more orders to fill to the downside, which would be set right here where the market went ahead and created the fair value gap, right? We understand because you're the best mentor, bro. Thank you, man. It really means the world to me, right? But yeah, in this case, you guys remember, right? The market dumped, found this bottom, and created a bullish trend. What does this create right here? This creates drawn liquidity, right? So let's go ahead and mark this out as drawn liquidity plus price target, right? And it will make sense in a minute. So here, let me go ahead and put this like this. Okay, so what are we doing in this case? Well, what we're trying to do in this case is we're looking for an inverse fair value gap. Why? Because mainly the market went ahead and swept liquidity, and we're getting the MSS to the downside, right? So if this bullish fair value gap is holding us up, but sellers are in control, of course we're going to go ahead and inverse this. It's a no-brainer, right? So when we go ahead and inverse this, you're going to go ahead and enter based off the fair value or off the close, right? So it's going to look like this. You set your stop loss at the top, and you set your price target at the bottom, right? And just like that, you have a very nice, what's it called? Inverse fair value gap trade. Right, and then right after, what you're going to do is, of course, you're going to go ahead and target drawn liquidity, which will be your price target. Just like that. Right, and let me show you how this works, right? Because, of course, I could draw something and be like, oh, yeah, it works. But I want to show you guys exactly how it works real time. Right, so here, let me go ahead and show you guys right here. Right, so let me see. Let me try to find a good trade for you guys that we ended up catching using an inverse fair value gap. Right, so right here. Actually, no, this is going to be the regular fair value gap. So let me show you the inverse one. I think this was one right here. No, this is a fair value gap. Damn, I've been trading more fair value gaps than inverses. Let me see. Okay, right here, right here, right here, right here. Okay, so in this case, right? Let me show you real time. Right, so you can see right here, we ended up we ended up taking NQ shorts, even though the trend is bullish. Why are we taking NQ shorts? Well, right here, the market went ahead and swept this drawn liquidity. Right, you guys see the market pushed above this drawn liquidity, and we created this bullish fair value gap. Well, if the market went above drawn liquidity, we have no more room to go higher. So you kind of bad, David, bro. No, I'm just kidding. But yeah, in this case, what we're doing is, of course, the market went ahead and swept liquidity up here, and we're getting a strong selling candle. And keep in mind, we have a very nice bullish fair value gap right here, right? So ideally, what we're looking for is going to be a very nice sell-off, a very nice sell-off below this drawn liquidity. Once we get that, we're going to be targeting drawn liquidity to the downside. It's that simple, guys. It's really that simple. I'm joking, bro. You're good, bro. So yeah, and you guys can see exactly how the trade ended up playing out, right? We caught a quick 25-point scalp. We'll take it, right? Now, let me show you guys, and here, let me show you guys one more example from today, pretty much, right? Pretty much what ended up happening is on ES, just like how I taught you guys, we had drawn liquidity right here. We swept it. We started getting a lot of buying candle. So now that we know that the market swept the level of liquidity, we know exactly why we're going up, right? Because we're getting the MSS model. Here, let me show you guys today's trade, for example. Right? Same model, same everything. Market swept liquidity, we got the MSS, we inverse fair value gap, drawn liquidity below, we hit the price target. Just that simple, guys. It's really that simple. Right? You made $1,400 today, bro. That is insane, bro. That is insane. I love to hear it, bro. I really do. But yeah, now let me show you guys the model that you guys need to use. Here, let me show you, let me kind of screenshot this, right? So everyone can save it. Using trend, drawn liquidity, MSS, and what else is it? Oh yeah, IFG, right? Let me make this a little bit bigger, just like that. Boom. All right, so I'm gonna go ahead and send this in the Discord, and both Discords actually. So here it is. So here, let me go ahead and put this out. Boom, boom, perfect. And let me go ahead and put this right here. Oh, okay. So, thank you, bro. Thank you for screenshotting it, right? But okay. So what we're gonna do in this case is I'm gonna show you guys the regular fair value gap model, right? So how's that gonna look like? Let me show you guys right here. It's gonna be super simple, right? So I'm gonna go ahead and delete all of this as it's not really too important anymore. Actually, I'm not gonna delete this. Let me see. I'm gonna use the same exact example. I'm just gonna delete some of this. Okay. So let's see. Now, okay. In this case, how are we gonna know when to trade a regular fair value gap? Because I know you guys might be wondering the same thing, right? So the way this is gonna look like, I'm gonna go stay. Hey, bro, I got you guys. Hey, Jacob, bro, thank you for coming by, bro. It really means the world to me. Have a good one, bro. I'll see you tomorrow. All right. How much room in points does it need to have when you're more interested in to take drawn liquidity? Points don't matter in that case. It doesn't matter. It's how big the rejection really is in the market, right? So if it's a huge wick to the downside, then you're gonna mark that as drawn liquidity, right? That's how I do it. But okay, so in this case, right, with this regular fair value gap, what are we looking for right here? Well, let's say for example that the market trend is currently trying to become bullish. We create this fair value gap, and we know that we have drawn liquidity to the upside, right? But the market never ends up taking out drawn liquidity before, as we create this fair value gap. So that means that we have room to go down into this fair value gap and go right back up, right? So we can use this as an entry point, right? So what we can do in this case is we can go ahead and mark out the fair value gap, which is going to look just like this, right? Let me see. Boom, we have the fair value gap, right? We know that this is going to be a bullish fair value gap because the market has not taken out drawn liquidity up here, meaning that we still have room to go higher. So the way I'm going to mark this out is going to be like this, right? So we have, let me see, we have a bullish fair value gap, bullish fair value gap just like that. I'm going to do this, right? And we also know right here that we have a lot more room to go higher, right? Right, so we know that we have room to go higher because the drawn liquidity has not been swept. Keep in mind, the trend, yes, the trend is bullish, right? I'm going to go ahead and put it right here. Bullish trend, right? We know that it's bullish because, of course, the market found the bottom, which is going to be right here, right? The market found the bottom, trend is bullish, a lot of buying coming in. We created this bullish fair value gap, but we still have room to go higher into drawn liquidity, right? So what are we looking for in this case? Well, what we're looking for is it's going to be a simple retracement back down into this fair value gap, which is going to look like this, right? But instead of us inversing this, since the market has not taken out drawn liquidity to the upside, we're going to be looking to take longs from this fair value gap. So how's that going to look like? Let me see. Which time frame do you use for fair value gaps? The 5-minute time frame is my favorite time frame. I always use the 5-minute, right? And clock, I do see that what you're saying, bro. You are right. Yeah. So in this case, what we're gonna be looking for is it's gonna be a simple bounce off this fair value gap, which will look somewhat like this, right? And once we start getting this bounce, and once we start seeing that buyers are stepping in off the midpoint of the fair value gap, that'll be your cue to go ahead and enter shorts. I mean, not short, my bad. To enter longs, my bad on that, right? So why are we entering longs? Once again, the trend is bullish. We have not taken out drawn liquidity, and we know that the market is going to keep going higher because we want to go ahead and fill this level above, right? So the way this is going to look like is you're going to go ahead and enter longs. You guys can always place your stop loss down here at the most recent low after you guys entered, and you guys can go ahead and target drawn liquidity above like that, right? So how does this look like real time? Here, let me take off my glasses. How does this look like real time? Let me show you guys, right? So it will look somewhat like, bro, my eyes burn. So it will look like this, right? Here, let me see. So let me show you guys a fair value gap trade with this exact. And in the meantime, let me go ahead and screenshot this. Just like that, right? So here, there it is, bro. Let that stop loss breathe. Yeah, so you really could, but ideally. Okay, so when I enter fair value gaps, I usually enter as the market is bouncing up, right? So when we're getting a guaranteed bounce, I know the market is going to keep going higher, right? So when the market is going higher, I'm just going to set my stop loss at the most recent low the market created, and then that'll be my stop loss, right? So a 4-point stop loss on ES is not bad at all, right? From all of your eyes burn from all the overnight forward sessions, bro. It's bad, bro. I really need to stop that. But anyways, how much FPS do I get on Fort, bro? Like, I don't know, like 400 around there. But okay, so in this case, right, how is this gonna look like? And here, let me go ahead and send this in the chat. I believe I sent it over there. Let me send it right here. Boom, just like that. Okay, so now, how does this model look like real time? How does it look like with an actual trade, right? Well, the way it's gonna look like is, let me show you guys right here, right? So let me try to find a fair value gap trade that I ended up taking. Let me see. Right here, right? So here's one. I ended up telling everyone in the commentary channel that since we know that drawn liquidity here, we ended up taking this on the 17th, right? So the 17th was right here. So I told everyone, keeping an eye out on this drawn liquidity at 20,065. Why are we looking out for this level? Well, main reason being is because we have room to go lower. We have 20,065. That is the drawn liquidity. The current market trend is bearish, and we know that we have room to go higher. I mean lower, right? We also have this bearish fair value gap. So what we're looking for is going to be a simple retracement into it. We get the rejection. Once we get the rejection, that'll be the cue to go ahead and enter, right? How does that look like? Well, let me show you guys right here, right? You guys can see, we got the rejection. You entered off the rejection, and of course the price target will go ahead and get hit, just like that. Let me show you guys another one, right? Let me see. Here's one, right? So we ended up taking ES shorts right here, right? We ended up taking ES shorts. Why? Because right here we have a bearish fair value gap. We have room to go lower into these levels right here. So what we're gonna do is, of course, wait for the rejection. Once we get the rejection, we go ahead and enter shorts. Once you get the shorts, you target drawn liquidity to the downside, right? And that's exactly how I ended up catching these trades. And I promise you guys, I can show you a million trades that I use this model for, and they've all played out the same exact way, the same confirmations, the same everything. Right, so that's pretty much what I look for my regular fair value gap models. All right, guys. But yeah, here let me catch up with the chat here. Let me see. Okay, so guys, if you guys have any questions, let me know. It could be on any of these trades. It could be on any of my models. It could be anything. Right, let me know. That's what I like about this fair value gap model. It's so simple to understand. I've tried so many models, and it's confusing as hell, bro. Yeah, I promise you guys, I used to trade a lot of strategies back then, but ever since I switched to fair value gaps, it pretty much was amazing, right? I've never really, what's it called, switched ever again. I've always liked fair value gaps. It's always been my thing. And that's why I'm here, today or pretty much every day, teach you guys and give you guys alerts for the fair value gaps. But yeah. Now, if you guys don't have any questions, we can always call it a class. I wanted to do a quick one today, just a quick recap, a quick review, because I have some stuff to do later on. But yeah. David, is the fair value gap always going to be at the midpoint of the candle? No, not always. Ideally, you would always want it to be in the midpoint, but it won't always get to the midpoint. Sometimes we go a little bit lower than the midpoint and the market still dumps down. Right, so keep that in mind. But it doesn't really matter. Just because it doesn't hit the midpoint does not mean the market can't reject. Right, so keep that in mind, Doc. Can you show the setup? Oh yeah, here. Let me go ahead and show that real quick. Hold up. Bro, the picture's a little bit blurry, bro. I'm not gonna lie. Yeah, it's way too blurry for me to see. But here, let me go and see. Can you take a look at gold, please, and tell me what you would take today? Yeah, I got you guys, because I know there's a lot of gold traders in here. Let me see. You should make that setup. The thing is, wait, let me see. You should make a setup tour, bro. I got you guys. I'll do one. I'll show you guys literally everything. But here, let me try gold real quick. Right, so if I were to trade gold, what would I have charted? What would I have seen and all that stuff, right? So let's see. Right, so we're looking at gold, right? We're looking at gold on the 5-minute time frame, and I'm gonna go ahead and pay attention to gold. Today was Monday. Yeah, today was Monday at 9:30. So it'll be this candle right here. So what would I have taken from gold today? Well, the first thing, okay, guys. So the first thing we always want to do is here. Let me go ahead and mark out draw on liquidity, right? So let's see right here. So what in this case we know that gold is currently bearish, right? So the first thing we want to go ahead and do is mark out the draw on liquidity. How do we find this? Well, first of all, we know that the market went ahead and found this high right here and rejected back down. That's going to be our level 1, right, of draw on liquidity. We're also going to have this high up here, as of course the market dumped down, found this high, and went back down, right? We also have this high up here, right? And if you guys go on the higher time frame, you guys will see exactly what I'm talking about. So we have this wick, we have this wick, and we have this wick, right? We know that the market trend is currently bearish, right? And of course we have some other levels to the upside, which would be this one and this one, right? So this is exactly how I would chart gold today, depending on the movement, right? Now we know that the current market trend is bearish, right? We want to start looking for draw liquidity to the downside, right? Just in case, just to know if the market has some room to go lower. In this case, we do know exactly where the level is. So it'll be right here at 2,390.2, right? What do I trade? I trade NQ and ES always. NQ and ES, they're my go-to trades. But yeah, in this case, we do know that we have one level to the downside, which is at 2,390. If we expand our time frame, I don't think we have anything any lower other than 2,380. Let me see, 383. Right, so of course it's pretty far away, not super far away, but it's definitely around the corner. So if the market keeps going down, we'll be marking out these levels, right? So what ends up happening here? Well, let's go ahead and see what the market does, right? So if we give the market some more time, you guys will see that the market ended up dumping right back down into this level of liquidity, right? So here's the question that you guys want to be asking yourself: do we have room to go lower, or do we have room to go higher, right? Depending, because you guys know we ended up taking out this level of liquidity, right? So we have DOL. Right, so in this case, what do you guys see? Well, we ended up making this fair value gap right here. Right, so how's this going to look like? Well, we go ahead and mark this out just like that. Right, and what we want to see right after is see if the market can go ahead and find some sort of a bottom to start going back up. Right, in this case, we can see that the buyers are starting to step up right here. Right, we got the sell-off, we swept the draw on liquidity, but buyers are stepping up, signaling that we might have a bit more room to go higher into levels above up here. So it'll be this one. Right, it'll be this one, it'll be this one, it'll be this one, right? So in this case, you guys see there's a lot of buying coming in right here, right? What is this telling you guys? We're getting the market structure shift, right? So if we keep playing this candle, you guys will see that. Let me see. That eventually we're gonna go ahead and go. You guys see that. Let me see. Hold up. You guys see that the market is currently creating, what is it? Higher highs or higher lows, right? So in an uptrend, you guys are always going to be looking for higher highs and higher lows to be created. In this case, the market is creating very small higher lows, right? Signaling that the current trend is bullish, right? We have the main low, and higher low, right? Showing you guys that the market is set to go a little bit higher since the trend is currently bullish, right? So what we're going to do in this case is we're going to wait for a simple inverse off this fair value gap right here, since we do know that the market structure is trying to be bullish, right? So how are we going to trade this? Well, we simply just wait for a break above, which I believe will happen eventually. I don't know how gold moves too much. But okay, here it is, right? So here we're trying to get the break above, right? So let's see if the candle ends up closing. Okay, right here. So your entry would be right here in this candle. Why? Because this candle ended up breaking and closing above this fair value gap, right? So how is your stop loss going to look like? Well, you're going to go ahead and place your trade just like this. You can either set your stop loss at the bottom or you can set it at the top right here. Ideally, I would probably set it right here, right? And my price targets would be all of these over here. So it'll be just like that. Right, so we're risking 1 point, which I think is a lot on NQ. I don't know. I don't really trade NQ, so you guys do know that. And we're looking to make about 16 points, right? Am I expecting 16 points? Not really. What are your settings for the half point on the rectangle? Okay, so go over to your rectangle, double click it, right? And where it says, right here on the style, where it says middle line, just click this. You see how it turns it off and on? So that's what you do. But yeah, ideally I would enter my inverse fair value gap trade right here, right? And I don't know if it ended up playing out, so let me see. Let me see. Dumped a little bit. Did it hit the stop loss? Yeah, okay. So here it is, right? Exactly how I imagined, right? So we're gonna end up entering this trade off the break right here, off the break and close. We set your stop loss at the bottom, where the market went ahead and bounced from. And of course, your TP1 or your PT1 is gonna be set at 2,396.4. Right, of course we hit it, so you're gonna go ahead and move you're gonna trim some off here. You're gonna move your stop loss to break even, and you're gonna go ahead and expect the next candles to go ahead and get taken out. Right, I think we ended up taking them out. Yeah, so there's PT2 right there, taken out. We never got stopped out, I don't think. Yeah, no, the market never stopped us out. Let me see. Here, let me catch up. Let me catch up with the chat. What's the difference between a regular fair value gap and an inverse fair value gap? Here, I'm gonna link you my YouTube. I explained it all right here. Hold up, let me go ahead and find the channel. So it'll be, let me see all my videos. It'll be this one. You're the best, David. Hey man, thank you, bro. Thank you. I'm not all that. Trust me. It's just, you know, we work with the strategy, we play with our rules, and it works out. You know what I mean? Can you screenshot this trade? This is a great example. 100%, 100%. So I believe you want me to screenshot it from the complete start. So it'll be like this. Would you want me to break it down for you? I'm sure you're gonna say yes. Here, let me go ahead and put this. So we have Tron liquidity plus, and this is for my gold traders. You guys know I don't trade gold, so I don't know too much about it, but the strategy does work. Right, so your stop loss is going to be placed down here. We're getting the market structure shift right here. We got the MSS model. We swept on liquidity. We got the MSS model. We inverse bearish fair value gap. So I'm going to go ahead and put this like this. Bearish FEG. Right, so okay, so the one that was asking me, let me see, Beaver, I believe that's you. Yeah, Beaver. So pretty much what we're doing in this case is the market trend is bearish, right? As the market is going down, we're creating drawn liquidity, which is going to be here, 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 and here, right? So if the market ever reverses to the upside from being bearish, we're going to be targeting these levels of liquidity, as this is where all the levels are, you know, all the orders are lying in the market, right? In this case, the market went ahead and went below drawn liquidity, and we created an MSS model right here. Right? How do we know it's an MSS? Because buyers are stepping in and breaking new highs. Right? Now, what's the one thing holding us down? This bearish fair value gap. So what are we looking for? Well, if the market trend is bullish and buyers are in control, we're going to be looking for a simple inverse. Right? In this case, it'll be right here, where if you zoom in, you guys will see that the market ended up breaking right above this fair value gap right here. Right? So you're going to go ahead and enter right here and set your stop loss at the most recent low, which will be at this candle low right here at 2,392.5. Right? PT1 is going to be right here, and PT2 is going to be right there, right? So this is exactly how I would trade gold today, right? Sure, it wasn't the cleanest price action, but the trade is the setup is still there, right? So here, Beaver. Look, wait, let me catch up with the chat. Thank you for the breakdown. I appreciate it a lot. I got you. Let me see. Also, check his YouTube after this live. He has this all recorded. If you want to check it out later or take some notes. 100% Zero. Thank you, man. Yeah. If you guys, once again, if you guys do want to check out my YouTube, maybe subscribe, you know, and all that stuff, it'll be right here. It'll be right here. So now let me see. Looking for a break, then enter, then place your stop loss in the middle of the. No, not the middle. Sometimes it will be the middle, sometimes it will be higher or lower. You will place your stop loss at the most recent low. In this case, it was at the middle, right? So if you zoom in, the most recent low was this wick right here. You can see it right here, right? This is gonna be your stop loss, which is where the market most recently bounced from, right? So that's where you would place it. Most recent low, exactly, yeah. It has to close with no wicks. No, the wicks doesn't matter. It just has to close above. The body has to be above the fair value gap. So right here, you can see that if you zoom in, this candle right here, it ended up breaking just above the fair value gap. So that's where I would enter, right there. TJR. Now, I believe I'm pretty caught up with most questions. I don't know what happened there. Let me see. If you guys have any more questions, let me know. Let me know. At what time do you stop looking at charts? There's not a specific time I stop looking at charts. Is if the chart is super choppy, I just close the chart. I just don't like trading chop. I don't. It's super annoying and it's super frustrating. Would this works on SPY options? Yeah, 100%. It will. Yeah, it will. I have a lot of people that trade QQQ and SPY options with my alerts and all that stuff, and it still works out the same way. Because Clan Killer, you do know that NQ is QQQ, same exact thing, and ES is also SPY, the same exact thing. So they move the same exact way. So if I ever take ES longs or shorts, you can always take SPY calls or puts, and if I take NQ longs or shorts, you can always take calls or puts on QQQ. Thanks, I got you. Let me see. I'm seeing some people type here. Why don't I trade options? Bro, the Greeks they're so bad, bro. I hate options. Like I hate options with a passion. Like it's really don't get me wrong. It's really fun to trade. I really like trading options, but it's just not something that gets my attention. Like options is made to be against you. Yeah. So if you guys trade options, definitely, I'm not saying it's bad. I'm not saying you guys are going to lose money. But there's a thing called theta, right? Greeks, right? Pretty much what Greeks is if the option, okay, you guys know how options have expiration dates, right? Let me see. Do I only trade futures or, no, I only trade futures. I do not like all coins. That is the, bro, rug pulls happen left and right. But yeah, no, I don't like altcoins. But okay, so with Greeks, right? What it does is with options, you guys know that options have an expiration date, right? It can either expire today, tomorrow, Friday, next week, next month, next year, right? Ideally, if you guys are day traders like me, or maybe like yourself, because you guys are in a day trading Discord or in a day trading stream, you guys would ideally be looking at 0DT or 1DT contracts, meaning the contract either expires today or expires tomorrow. Meaning, if the move does not happen the second that you buy the contract, there's a thing called theta, right? Meaning, if the move does not happen, the contract, even though the price has not moved, or even if the price has gone up, the value of the contract will start to decrease, right? Meaning, right? Let's say, for example, let's go over to SPY, right? Let's go over to SPY. Let's say that you guys are gonna go ahead and answer calls right here, and the market doesn't end up doing anything right off, ever since you enter. In this case, it's choppy, right? What ends up happening is, let's say you enter the contract at $100 per contract. In this case, even if price goes back up into this case right here, you're not even gonna be at break even. You're still gonna be red, right? Which is super against you, and I just hate the fact that you need to be right on the timing and right on the chart, right? So the odds are against you with options. So I just don't like that. With futures, there are zero Greeks, which is why I always suggest futures to everyone out there. Yeah, clockwise, exactly. I'm not gonna say options is a scam. It's just built to be against you. Sure, you can make a lot of money very quick, but as fast as you make it, it's probably as fast as you're gonna lose it. I can promise you guys. I can ask anyone in here if you guys are profitable on options, and I'm pretty sure like 99% of you guys will say you guys have lost money in options, right? Because that's just how it is. How do they change the price? Okay, so options is a whole different market, right? It's people that are interested in buying the contract, not buying the stock, right? When you guys are trading futures, you guys are trading with people that are trading the actual future itself, right? With options, what's it called? With options, you're trading the contract, right? You're not trading the stock price, right? So there's not that many people that trade. There's a million options for one stock, right? So the fact that a lot of people have to trade that certain options to build volume, right? When they start seeing that the trade is going against them, they're going to go ahead and sell, making the contract price start going down, right? And that's where theta kicks in. So even if the chart goes your way, there's still a chance that you guys can still go red if not enough people want it. So yeah. Let me see. I'm out of breath here. There's no prop firm for options. No. There's one called Arctic Funding, but I think it's a scam. I don't think they're legit. So definitely be careful with that one. Yeah, definitely. I do not like options at all. I really don't like options like at all. Like I did it for 3 years. I can tell you guys like from experience, it's not good. After he has a good setup and making good bread, no point in looking for a chart and force a trade after that. Exactly. So yeah, if you guys make your green for the day, usually we finish in the morning, right? If you guys made your money in the morning, why keep trading? The whole reason to trade is to have financial freedom, right? To have the freedom of to do whatever you guys want, right? So once you guys finish trading, you guys made your money, go out to eat, go out to do whatever you guys want. You know what I mean? There's no point of trading more and more and more. Do you really know? Wait, do you know if I like? Let me see. Do you know if I take like 10 trade per day really quick on eval? No, you won't fail it, Karina. No, no, no. You could take 1,000 trades a day if you have to. As long as you don't hit the drawdown, you're good. You're good. Great class, David. Thank you. Time to go lift some weights. Hey, Dice, bro. Have a good one, bro. If anything, I'll see you in tomorrow's class. But yeah, alright guys, I'm gonna go ahead and call it a class for today. We reviewed some good stuff. Yes, this was all recorded, so I'm gonna go ahead and post it right now. But I just have some stuff to do. I'm really busy. I'm a bit tired, I'm not gonna lie, which is why my energy today is a little bit down. But yeah, alright guys, I'm gonna go ahead and call it a, wait, let me see. Where can I buy one? Here, let me go ahead and send it to you. Hold up. Here it is. W, hey, thank you, man. Thank you. And guys, I know not that many people joined today. Don't stress it. You know, I did start it a little bit late, which is why not that many people were here. So here you go. There it is. Thank you guys. Thank you. Really good class. Gonna head to sleep and join me is late W stream. Thank you, man. Alright guys, I'll see you guys tomorrow in the live trading. I'll be live on YouTube. And I'll be live in the Discord Premium. Alright? So yeah, alright guys, I'll see you guys tomorrow. Alright guys, take it easy. Peace out. Peace out. Alright, and for my stream guys, I'm gonna be live trading tomorrow on YouTube, and I'm also gonna be live trading tomorrow in the Premium. Right? And I'm also gonna do a class. So yeah. Alright guys, take it easy. I'll see you guys tomorrow.